Hyderabad's real estate landscape has undergone a significant transformation, according to a recent report by Knight Frank India. The latest report, titled India Real Estate Office and Residential Market, JULSEP 2023, reveals a trend that has been developing since 2018. What was once the sturdy cornerstone of Hyderabad's real estate, affordable housing, has now descended to its lowest point. The city has seen a sharp decline in the sales of affordable homes during Q3 2023, spanning from July to September. Among 7 other major cities in India, Hyderabad recorded the least sales in the sub-5 million segment, with a staggering year-wide sales drop of 44%. While Hyderabad's overall real estate market has grown by 5%, a significant portion of its sales, precisely 52%, now falls in the premium category. This shift towards premium properties has resulted in 11% year-wide increase in price levels, with an average price per square foot reaching Rs 5,518. According to Knight Frank, the impact of price hikes and interest rate increases has been profound, leading to a 7% increase in down payment and a staggering 14% rise in effective EMI. This has made it increasingly challenging for middle-class individuals to achieve their homeownership dreams. Q3 2023 statistics reveal that 52% of residential sales in Hyderabad are now in the ticket size of 10 million and above, leaving only 9% for homes below the 5 million mark. Shishir Baijal, Chairman and Managing Director of Knight Frank India, commented on this transformation, saying, "Residential sales continue to gain momentum, reaching multi-year highs. Although inventory levels have seen a significant rise due to developers launching projects to cater to this robust demand, the overall market health is improving, with strong sales velocity." Elevated interest rates and prices have had little impact on higher ticket size homebuyers, but the affordable segment has been severely affected, necessitating further interventions to stimulate demand and enhance development viability. He added, "While we celebrate overall residential market growth, concerns arise, notably in the affordable segment, which has seen a steady decline in Q3 2023. Economic turbulence in recent quarters hit lower-income consumers, affecting segments like rural consumption and the lower end of passenger vehicle sales. This decline in the affordable housing segment is worrisome because it's been the largest buying segment, crucial for long-term industry growth. Prolonged slowdown could harm the real estate sector in the long term. Therefore, stakeholders must reconsider strategies to revive the affordable segment and maintain its momentum."